Five ways rich people make money with inflation. Hello, everyone. If you're curious about how certain businesses thrive in times of inflation, you've come to the right place. Last year, when the Federal Reserve lowered interest rates, many predicted inflation was on the horizon. The Fed reassured us, citing only a slight rise above 2.4%. But reality tells a different story. We've witnessed a sharp increase in prices, not just in assets like real estate and stocks, but in everyday consumer goods as well. In the US, inflation rates have hit their highest since 2008, largely due to the economy bouncing back from the pandemic. With more people returning to work and spending more, consumer prices have soared. In May, the annual rate of inflation reached 5%, a significant jump from 4.2% in April and the highest since August 2008. Inflation affects most people negatively, but some are finding ways to profit from it. Yes, every challenge brings opportunities, and inflation is no exception. You might be wondering if it's possible to benefit from inflation. The answer is a resounding yes. Let's dive into how the wealthy are turning inflation into millions. Before we go further, please support this video with a thumbs up for the YouTube algorithm. Remember, this isn't financial advice. It's for educational and entertainment purposes only. Invest in real assets. Currency is just another commodity whose value fluctuates based on various factors, including supply and demand. For instance, imagine an economy with only $10 and 10 houses. Each house would cost $1, but if you suddenly double the money supply to $20, while still having only 10 houses, each house would now cost $2. That's inflation in a nutshell. When the economy nearly collapsed last year, the Fed injected trillions of dollars to prevent a depression, leading to a significant increase in the money supply. A staggering 22% of all US dollars in circulation were printed in 2020. Those with basic economic knowledge foresaw inflation coming. Smart investors quickly moved their money into real estate, taking advantage of low interest rates. Real estate prices have surged by 15–20%, meaning investors not only combated inflation, but also made substantial profits. The savviest ones used mortgages to leverage their investments, turning good deals into extraordinary ones. Debt as an opportunity. Debt often gets a bad rap, but it can be beneficial, especially during inflation. If the value of a dollar declines over time, borrowing a dollar today and repaying it tomorrow means you're effectively making a profit. Consider the median house price. It's around $350K today, but was just $150K 20 years ago. With the real value of the dollar falling each year, that $150K from 2 decades ago is equivalent to today's $350K. Big companies like Apple and Amazon have been borrowing money despite having substantial cash reserves. Because why use your own money when you can invest it for higher returns and borrow at a lower rate? This strategy also offers tax benefits, making borrowing an attractive option when interest rates are below inflation. Gold as a wealth preserver. Gold has long been considered a reliable safe haven for preserving wealth, particularly in times of economic turmoil or crisis. It's a kind of financial security blanket that people turn to when the future seems unpredictable and the market feels unstable. For instance, during the financial crisis of 2008, when many assets were plummeting in value, gold's price significantly increased, jumping from around $600 to $1,000 per ounce. This surge was a clear indicator of how much people trust gold as a protective asset during tough times. The enduring value of gold stands in stark contrast to the US dollar, which has seen a substantial decrease in its purchasing power over the last 100 years. This contrast underscores gold's role as a store of value. Unlike currency, which can be affected by inflation and other economic factors, gold has consistently retained its value over time. It's not subject to the same kind of volatility or devaluation that can impact paper money. However, it's important to understand that gold is a passive asset. This means that unlike stocks or real estate, it doesn't actively generate income or dividends. When you invest in gold, you're not looking for regular payouts or rent. You're investing to maintain the value of your wealth over time. In essence, gold is more about wealth preservation, than wealth generation. It's a way to protect your financial resources, ensuring that they don't erode in value due to factors like inflation or market downturns. Moreover, gold is often seen as a hedge against inflation. When the cost of living rises, the value of gold typically increases as well. This makes it an attractive option for those looking to safeguard their purchasing power in an uncertain economic environment. Additionally, gold's universal value means that it is recognized and valued all around the world, providing a form of financial security that is not tied to any one country's economy or currency. Cryptocurrency as a digital gold. Adding cryptocurrency to this list might raise some eyebrows, but it's impossible to ignore how some investors have benefited from inflation through digital currencies. Cryptocurrency, a relatively new financial frontier, is underpinned by innovative technology that holds a lot of promise for the future of money. Despite this, cryptocurrencies like Bitcoin remain in a nascent phase and are known for their high volatility. This unpredictability can lead to rapid price fluctuations, making them a risky investment choice. A significant factor in the meteoric rise in Bitcoin's value over the past year can be linked to the substantial amount of money injected into the economy by the Federal Reserve. This influx of cash has led some investors to turn to cryptocurrencies as a hedge against inflation and the devaluation of traditional currency. Those who foresaw this trend and invested in Bitcoin early on have witnessed a remarkable increase in their wealth, in some cases exponentially. However, it's crucial to approach cryptocurrency with caution. Its market is still developing and lacks the stability of more established investment options like stocks or real estate. The high risk associated with digital currencies stems not only from their price volatility, but also from regulatory uncertainties and the emerging nature of the technology itself. While the potential for high returns is undeniable, it's accompanied by the possibility of significant losses. For investors willing to take the risk, cryptocurrency offers an unconventional avenue to potentially profit from inflationary trends. Stock market for stable growth stocks are my favorite choice. They may not have experienced the meteoric rise that cryptocurrencies have seen recently, but they offer a more stable and less risky option for growing your wealth. Consider the S&P 500, which impressively grew by 40% from July 2020 to July 2021. When you invest in stocks, you're essentially buying a piece of a company. As the broader economy flourishes and these companies expand their operations, the value of your stock investment typically increases as well. What makes stocks particularly appealing is their ability to grow alongside inflation. In periods where prices are rising and the economy is growing, companies often see increased revenue and profits, which in turn can drive their stock prices up. This growth means that investing in stocks can be a strategic way to not only keep up with inflation but potentially outpace it. Moreover, stock investments are a reflection of consumer spending. When people spend more, businesses generally perform better. This increased performance often translates into higher stock values, allowing investors to share in the success of these companies. It's a way to align your investment strategy with the broader economic trends, capitalizing on periods of economic expansion. Furthermore, stocks offer the advantage of diversity. Unlike putting all your money in a single asset, the stock market offers a wide range of industries and companies to invest in. This diversification can help mitigate risk, as the poor performance of one stock or sector can be offset by the strong performance of another. Additionally, many stocks pay dividends, providing an income stream in addition to potential capital gains. In conclusion, inflation doesn't have to spell disaster for your finances. By understanding and strategically investing in assets that hedge against inflation, you can protect and even grow your wealth. While the rich often diversify their investments, even those with modest savings can follow these strategies to some extent. I hope you found this video helpful. If you did, check out our custom playlist with our most popular videos on business, investing, and the stock market. Don't forget to give this video a thumbs up and subscribe for more content like this. Thanks for watching, and I'll see you in the next one.